Hi there, it's Rob Brown, host of the Accounting Influencers podcast, and I'm sharing a series of videos with Shorts Accountants on a deal that went through with T. Allen Engineering, and we got Andrew Mills here from there. You were looking to exit, weren't you, Andrew? And we're a year down the line. You looked at a trade sale, and then you took the decision to go down an employee ownership trust. And how do you feel right now, a year down the line?
Yeah, absolutely fine. It's all. We got used to everybody's now used to the idea. It's very much business as usual. Obviously, when I made the announcement, it was a big thing for everybody. I'd been the sole shareholder of the business, and but yeah, it's been very well received by the employees. They all feel an even bigger part of the business than they already were.
And any advice you'd give to business owners watching this that are thinking about exit and considering an EOT?
Yeah, it's just for me. It's what's right for you, really. As we said in an earlier video, it's about taking the emotion out of the situation, looking at what you're wanting to achieve. But for me, I think the biggest headline for EOTs is the tax benefit. But for me, it genuinely wasn't that. It was the legacy that I wanted to leave at the business. I could stay on as a trustee of the business, which was really important. And it ensures that the business is now protected for many years. And as a sole shareholder, the question was always asked to me, well, what's the end game? What's going to happen? And it's took that uncertainty away from the business now, and it's got a real good plan going forward.
So your succession planning objectives have been achieved. It sounds like it's been a very positive experience for you.
Absolutely, yeah. I can't really. There's been no negatives to it. As I said, everybody now knows at the business what the plan is going forward. Key staff have obviously been incentivized, and they've got something really good to aim for, and it then allows me to be welcome back at T. Allen anytime for a cup of tea, which was really important to me.
And that's an important point. Your employees are happy. What about your customers? How did they react?
Yeah, well, the key customers, the minute it had gone through, I didn't want them to find out about it secondhand, if you like. So I contacted them immediately. They were very interested in it. I explained that the company was still very financially viable. There was a large amount of working capital left in the business so it could function. And they all basically were very enthusiastic about it and said, congratulations. And it's certainly not affected any business, any of the levels of work that we're actually getting in. It's just, as I said, business as usual. That's the best sort of take I could put on it.
And Andy, I'm intrigued about whether Andrew's experiences are quite unique here. He's speaking very positively of the whole thing. Is that in line with other similar deals like this? Are there any other issues that might happen that Andrew hasn't experienced?
Yeah, well, I think generally it is a very positive experience. That's true. I do think there are some things to sort of look out for in our experience with some other clients. I think employee engagement is definitely one, because there is there's quite a change here, really, and you do require those employees to engage both as getting representatives to go on the trustee board and then working through the practicality of that, so how does that communication work, managing their expectation as what's going to happen. And you get quite a wide range of spectrum from people who just go, some employees go, well, nothing's really changed, and therefore they don't engage, and that you don't get the positive that you should have. And then equally get some people who really have quite a high expectation. We now own this, so when are we going to get the financial benefit? And actually the truth is somewhere in between. They'll probably get the financial benefit a bit later down the line. So in summary, really, it's that communication. I think Andrew's done a really good job of employee communication, engaging with people. And often we engage with sort of expert sort of HR people and advise our clients to engage with those to make sure that communication is really clear. And then there's that structure of how that's going to work in terms of trustee meetings, trustee involvement is going to happen going forward, really. And that's key to it, I think.
And Andrew, there's a leadership role, as Andy hinted at. You've got to get your people to step up and in, haven't you, into the gaps there at the top and take on responsibility.
Yeah, I mean, we basically had 2 more directors appointed at T. Allen when obviously the EOT went through, which were obviously trusted staff, and they're there on merit. But yeah, I've got a 5-year plan where I'm going to be basically phasing myself out of the business, and it allowed me to actually look at that succession plan. And you're quite right, it's about it not being about you anymore, or all about you as the 100% shareholder. That's got to be managed accordingly. And maybe post transaction, we actually work with a business consultant who actually comes in and supports me on that. So yeah, that's something that's got to be considered. Yes.
Yeah. And David, from your perspective, has this been a run-of-the-mill exit here?
Certainly on an EOT, yeah, we've done a load of these jobs now, but it's lovely to work with Andrew and the team. They've all got similar kind of angles to them, if you like. They all want legacy to be important. They all want succession to, it's an important point for them.
That's culture, though, isn't it? That doesn't happen by accident. Andrew has brought that in over the years with his hiring.
Absolutely, yeah. So I think Andrew's disposal was fairly typical because doing it for the right reasons, right type of business, cash rich business that's doing well. So very, very common and similar, I'd say.
Yeah. Are there any aspects you would particularly pull out here, David, that need to be considered for people watching to get these deals right?
In terms of, I think we've covered quite a lot, haven't we, in terms of legacy and succession?
Well, I'm thinking bonuses, the post-work deal, any more mechanics of the deferred stuff.
So we touched on earlier about kind of the deferred and how that works. So as a reminder, the disposal works where a lot of the consideration comes out over the line in terms of deferred consideration. How that works in general is that future profits in the business will be paid up to the trust, paid out to the seller. So I think that's something that sellers need to get their heads around. For employees, Andy touched on it earlier. They're thinking, well, when are we going to get some of this benefit? Well, it's a long-term play for them. So
you've got to manage their expectations, haven't you?
Exactly. You've got to manage their expectations. You've got to make sure they know what's going on. That's where the communication becomes really key. But effectively, as a collective, through the trust, those employees will benefit from the success of that business. It might take a little while before bonuses start to be paid, but as soon as there's some money in the business that's not needed to pay off the deferred consideration, that money can only really go one place, and that's to the employees as a bonus. So it's really, really powerful, I think, for those employees, and it's about making sure they know that and how that's going to benefit them. And Andrew's got that down to a T in his business, and how the EOTs work for him.
Andrew, I'm going to ask you in a moment just to finish off with any advice you give to business owners in a similar situation to you about what they need to know and do to go through this. But Andy, let's just finish with you on this point. Any other points about employee ownership trusts and this whole deal that you'd like to draw out that are important for business owners watching?
Looking at sort of post-transaction, I think probably the key thing is you've done the deal, you've done it at a point in time,
yes,
but then actually circumstances can change. We've seen that a few times in people post-transaction. So,
how do you mean? Can you give us a quick example?
Yeah, so you've got the owner's been owed some deferred, and they're expecting it over a period of time. And actually, their personal circumstances change, ill health, or their retirement plans accelerate, something like that. Yes. And then quite often you then look to perhaps refinance that deferred. So in other words, you go and look for external bank finance, and that can work for the seller because it can accelerate their deferred, but it can also work for the business, and it has to work for the business because the trustee is making the decision to take that bank finance, because it can actually restructure in a way that means the business has got more certainty over its cash flow and therefore its ability to invest in the business as well. So that's the sort of thing that can happen post-transaction that you didn't quite envisage at the time you did the transaction. Circumstances have changed. That's something to just to bear in mind, maybe.
And what was Andrew like in letting go, Andy? Because you phased him out of his role. He's got to get his head around no longer being involved in the business. What was he like, a bear with a sore head, or did he take it on with good grace?
Well, he sat there looking at me, so I'm going to have to say with good grace, but it's absolutely true. I mean, Andrew was doing it genuinely for all the right reasons, and therefore, yes. I think it's been relative, pretty smooth, I think. But I think, like all owner managers, it just as we've been saying with the employees, it's a transition they've got to understand and be communicated with. The same goes for owner manager. You've been your own boss for a long time. You've been able to make all your decisions for a long time, and you're doing it for the right reasons. But actually, there's a little bit of gentle nudging aside, because that transition's important. It's got to happen. Responsibilities have to be passed on in order for this to be a success when the owner manager is no longer there. Over whatever time period that is, in 3, 5, 7 years' time, it's got to be a success. So in this case, that worked really well. We have, touch wood, not in any deals we've done so far, but we have seen it in some of our networks where other people have been saying we really need to accelerate getting rid of the vendor now, because yes. Actually they're not they're not letting the business breathe anymore. We need to do that. So that is something, again, you need to be very clear in the communication of that and clear in the expectations.
And quickly from you, David, it's not just about getting the commercials right, it's about getting the people right. The human resources angle needs managing, all of the emotions and the expectations there. It's not all about the tax, is it?
Well, as a tax person, I would say tax is obviously key, but you're dead right. It is about people, and it's about how they react, and it's about making sure they know what they need to know at the right time. And I think that's a really key point, really. And for people listening, there are ways and means to make sure those people are kind of on board post transaction. You shouldn't forget about sort of the HR type angles of making sure people know what's going on. So it isn't just about the transaction. Absolutely, it's about post deal, making sure everyone knows what's going on, making sure everybody's along on this journey for the ride, if you like, to make sure that the business goes from strength to strength.
And Andrew, a few last words from you. I get a real sense talking to Andy and David and the sense of the team here that they really had you back on this. There's so much that you don't know. This is a real period of uncertainty and transition for you. How good were Shorts at bringing you through this?
Oh, fantastic. Yeah, I can't recommend them enough for what they did for me. It was, as you said, it's a huge decision for me. It had to be the right decision. It was the right decision with hindsight. A year in, it feels very right still. But yeah, it's to actually be able to comfortably know that you're actually working with a team that's actually, like you say, have your back, which is exactly what you need in that situation. And to not have any shocks post transaction, etc., etc. It's gone very, very well indeed.
And this is where Shorts are exceptional, because the experience you're talking about does not happen at all accounting firms. I'm afraid to say.
No, well, I'll be quite honest with you. There was a reason why I went out for sort of three. I actually got three sort of quotes in, if you like, because that's just basically what I would do generally.
That's good practice.
But there was a reason that I went with Shorts above others, because I just didn't get the right feel from others, and there are compliance angles that have got to be met, obviously, legal issues, tax-wise, like David mentioned, the legal side, etc. And my remit was that it all needs to be absolutely squeaky clean, compliant, and we get no shocks. And to be absolutely right, there's been no adverse information whatsoever. Yeah. And again, I was also helped post-transaction with the how do we tell the employees, and it's landing it right in the business, and
that's the comms and the PR stuff,
really,
isn't
really
it?
well.
It's really important, the comms, the PR, the messaging,
the
positioning.
Yeah,
you still look pretty young, Andrew. What are you doing now? Are you just playing a lot of golf?
You're talking to me there, Rob.
Yes, I don't see many grey hairs.
I'm still at T. Allen. It's still very much business as usual. Okay. And I've got a plan that this personal, the business has been my life. As a sole owner of the business, I'm sure people who are listening on this will be able to resonate with this if you're in a similar position to me, where the business becomes a huge part of your life, possibly too big a part, yes. And as a 100% owner. And it's allowed me now to get a bit of a plan for the next 5 years, and a lot of things that myself and my wife want to do with the family, etc. So we look forward to doing that. But obviously there's a lot of work to be done at T. Allen still, because the business is still growing. We've got some brilliant staff there, and we want to realise our full potential. So and the thing can carry on after I've gone, which is fantastic.
Of course. I want to finish off by asking all of you for a very brief few final words to the business owners watching. What advice would you give to them in terms of questions they should be asking themselves, words of advice as they approach exit, and perhaps think about an employee ownership trust? Andy, can we start with you on a few final words?
Yeah, certainly. So, I think going back to right at the start, really, I think it's consider all the options. I think that's where we like to think we do well. We don't, somebody comes and says, I want an employee ownership trust. We don't say, okay, great, here's a quote, let's get on with it.
Yes.
Actually, it's take a step back. Okay, why have you got to that decision? Have you considered your objectives and what it means for the business first? Let's look at all the options. And I think that's probably the most important question the business owner can ask. And then once you've gone through that decision making, it's then that's the key question. Why are you doing it, and why should you choose this option over the others? Let's not just leap into it, really.
Yeah, and some accountants would go straight into, here's your proposal, here's what it will cost, let's get cracking. But you're right, there's a lot of questions to ask. David, final thoughts from you on advice to business owners watching.
Yeah, so agree with everything Andy said. We've also talked about succession. Business owners need to ask themselves, what's the most important thing for me? Is it go out to market and get 5 bidders for the largest price, or is actually succession and legacy really, really important? And I think that's that's a key question. I think business owners should also ask themselves, how would employees feel? Whether it's a trade sale or an MBO or an EOT, what would that employee say to each of those 3 options? Not just employees, but also key employees as well. So think about all those kind of stakeholders, seller level, key employees, and the rest of the workforce. What would those people think to each of these exit options? And I think that will help drive which of these exit options is right for that business.
Yeah, this is great. Andrew, let's leave final words to you. What would you say to some of your peers out there, fellow entrepreneurs, business owners that built something up? They want to leave a legacy. They want to finish right, just as they started right. What are your words of encouragement to them?
Yeah, I think I would it involves a lot of deep thinking about thinking, sit in a quiet room, have a good think about what you want to do, discuss it with people that are close to you, your family. But yeah, it's about leaving out. The EOT, I think the headline from the outside looking in is the tax benefit of it, but there's a lot more to it than that, a lot more. And if you've got an emotional attachment to that business because you've actually been there from day one, then really you've got a real chance to do something fantastic for all the key staff that have helped you, and then they're going to know that they've got certainty going forward after you've gone. So yeah, that's it's just have a good thing. Is it right for you? Try and enjoy the tax benefits are great, but there's more to it than that. Consider everything. And then, yeah, I recommend it. It was right for me and I don't regret it for a minute.
Yes, and not only was it right for you as a choice, but Shorts, their expertise, their compassion, their understanding of all the different elements, they've been right for you as well, haven't they, in this?
Yeah, absolutely. As I said, I got the right feel from Shorts. Working with them then, the acid test then is when you get to work and are we getting the response? And historically, other companies who I've used, it would take them a week to call me back and it got frustrating. And the level of response I got was fantastic, and it's when you want to keep that momentum rolling, because you've still got your day job to do as well while you're doing this. And we managed to basically, find all the time to do it. The responses I got were prompt, correct, concise, and the process went well. It did.
Yes, well, that's brilliant to hear. Thank you so much, gentlemen, for sharing a breakdown, if you like, of what it takes to go through something like this. There are so many different angles that we've considered. We appreciate your honesty here and your passion and your expertise. We really appreciate you joining us.